Bitcoin is still in a holding pattern. I believe my last video that I made on YouTube before I said I'm going to take a break for Christmas, I mentioned Bitcoin's in a holding pattern, likely will stay that way. It's now been 11 days. It's still in a holding pattern. I didn't necessarily expect it to stay that long. However, what we're going to do in this video is to show you, hey, probably nothing's going to happen unless A or B are triggered. And if A and B are not triggered, then crypto's not going to do anything until the high impact economic events coming out, JOLTS, and the FOMC minutes on January 4th, they come out at different times, so the whole day is going to be wacky. You're going to have a fake out the wrong way, and then you're going to have continuation at some point. Sometimes it comes the same day. Sometimes that continuation happens the next week. But this week could be an absolute nothing burger unless, as we dive in the charts, one of these two or three triggers that we're going to identify happen. And then if they don't happen, just think January 4th, I could take a break in crypto until that date. So let's dive in and let's go find those triggers. Giggity, giggity. Here we go, everybody. The first trigger, that would make me think Bitcoin's at least going to test down about $800. Is if, we're going to dive into here. We're going to do very micro time frames here in just a second, because that micro time frame will get the next, 1 hour to 4 hour move. And most of us know a 4 hour move lasts 1 week. 1 hour move lasts about 2 days in terms of the oscillator, right? And if you go to the stochastics, if you measure from peak to peak or trough to trough, and you average it out, you do about 10 of them. That's about what it comes out to. If my memory serves, it's roughly that. All right, the 4 hour oscillator is like a week. So diving into the 1 minute chart to see how price interacts with this bottom line, which I'll show you why it's important here in a second. You're not technically on crackhead timeframes, crypto crackhead timeframes, because the next larger move is going to be based off of it, right? If this is the trigger. So we're going to zoom back. Actually, let's zoom out a little bit and see what's going on here. But if I forget to do this, just realize the big kahuna right now is the daily 21. If you could only use one thing on your chart, most beneficial one thing, it's how price reacts with or to the daily 21 on any upside movement. Obviously, if price just rolls over, it's not going to touch it again, and therefore it would not be important, but rather how it did interact with it in a bear sense is how it would go. But so these are origin lines, and we've already identified, back in November when it busted down, we had three main options. The third one, the one that was least likely to happen among those three that were almost definitely going to happen, the third one happened in which price stays below an origin line after falling below it, and then goes sideways for about 35 days, it was 15 to 45 days, and we were saying that way back here on that first move down. It's going to go sideways for 15 to 45 days, right? And then we didn't know which of the three variations. It ended up taking the variation where it fell below and then tagged it from the bottom after about 45 days of accumulation, okay? And now that we know that, we're expecting a downside move, in summary, coming back from break, because this line down here must be touched before price can be sustained above this line. That's just the way price works, and it won't stop. Unless we feel that another crypto cartel is going to play macro games with the chart like they did back here in 𝐃𝐬𝐬𝐜𝐵. But nothing like that's happening in the charts, and I don't think ever will again. Because now that other hedge funds know how much money this group or coordinated group made, it's going to come closer to mass market psychology with those, and they're all going to be fighting against each other. This type of setup, this won't ever happen again in Bitcoin, most likely. Yeah, because other big players know how much money was made there, and they're going to want to try it too. And that's going to make it so it'll never happen again, most likely. So the beauty of competition, right, for us, the consumers. No more ridiculous fake outs like that. So without that, this line, we know that, at least returning viewers, we all are confident enough with backtesting and statistical probabilities that we quote unquote know. I don't like using the word I know or guarantee, but quote unquote, we know that this line will be hit before any price action with this line happens. Okay, that's the summary. And we've been expecting this since November, I think it's 9th. Nope, November, yeah, 8th, 9th, when it bounced off that origin line with gusto. All right, now we're gonna zoom in here. What's this first trigger? Now that we know what's going on. I'm gonna give you 2 to the downside. We don't really need one to the upside, but yeah, we'll do 2 to the downside. One is horizontal, that'll be the second one. And this one is clearly not horizontal, all right? So this is the yearly low down here, 15.5. This is the big, one of the continuation big move down on Wednesday the 9th before consolidation happened, all right? So it's about 15.6, 15.5 down here. This bottom line connects with the bottom wick, not the lowest one, but the first, the low of November 8th, November 9th, okay? If you want me to put a price on it, there you go. And then if you zoom in, so now we're gonna zoom in, maybe to the 30-minute chart. See how beautiful price is here. Let's go back, there we go. And if you wanna connect it to that, that's what it looks like zoomed in. November 8th, that's November 9th. And then this is the yearly low, was a trap. So before it went down here, this hit the bottom. This one, not the yearly low, okay? This was a trap. Could be happening again. So we've had one trap below this line. Then it went up aggressively, right? All right. It just broke below. If price cannot get back above this same line from which it broke down on its second attempt. So these are what you call 5-minute oscillations. That's what these look like. You can't see them if you're on the 4-hour chart. Now you see them, now you don't. Often, there are 2 ways that price can have a fake out below what would be a trigger for a move. Because it's just dipping into liquidity. And those people who sold it here, they're the same ones who already had their longs down here. They're just driving price into their longs. And then the same money that was freed up and became liquid in form of a flat position from having sold this, they use the same amount to buy it on spot after their longs are in play. If that's what's happening, but that's the incentive behind it and why it happens. Fake out below, like, why? If you want to go long, why would you drive it below obvious support? Well, that's why. There's a lot of because if somebody's long here, they're trying to invite shorters. I'm sorry, they wanted people to go short because it's a little bear trap. Okay. So they're driving stuff in there, but there are 2 ways it gets back above. And it's not guaranteed too. It's if it does happen, there are 2 ways. And any of those 2 ways would avoid the trigger. So what I'm about to show you is 2 ways that this trigger will not happen and exactly what price will do and what it will look like and exactly how it will behave. Maybe not to the exact 1 minute, right? On a time scale, but the gist of it, it will be what happens with an extremely high probability if this trigger is undone. All right, where was I? It gets above with 5-minute oscillations. The higher highs do not matter. You don't care about higher highs when you are trying to identify the moment of truth, the retest of the breakdown. Was this a trap or not? You don't need higher highs. You just essentially need to stay in this zone, right? And then, so you can go like this. Watch, lower high, but you keep a higher low. You just can't go below that. You got to keep the lows on this. So it's a channel within a channel, essentially. But a lot of times the 5 minutes bumps its head, and then it turns into a 1 hour oscillation at a 45-degree angle, and then it goes back to 5 minute oscillations to get above. Those are the two ways it can get above. Purely 5 minute oscillations, or the 5 minute oscillations come up there, get rejected, and then it turns into a 1 hour move where you won't be able to see these anymore. It'll just be boom, boom on a 1 hour chart. So let's zoom out. And those are the two common ways that fake outs happen, and exactly what you'll see. Right? So one rejection isn't doomsday, because then it often converts into one higher low on the 1 hour. And the 1 hour is an extremely powerful chart. Extremely powerful chart, which is why that happens. Okay, well, we're satisfied on the 5 minute, but now we got to do this on the 1 hour to get, to invite other people to trade with us in our direction, so we don't have to work so hard, to make price go our way. And so, okay, now how can we do that? We'll go to a bigger time frame, establish a higher low, and then work up and consolidate under resistance. That's what's happening. That's it. Those are the two ways it'll get above. And if this trigger doesn't happen to the short, so the trigger is price doesn't get back above there. But here's the difficulty with it. It will look like, if it's the 5 minute to 1 hour oscillation, it'll look like it got rejected. But if that is what happens, so if I wanted to play this is what I would do. I don't know which one will happen. So what I would do is I would try to, look at my zone where I would be interested in being short. So I would look left for a wick. Okay, bam. I would probably want to enter and build my position over this 1/4% range. Honestly, so this is actually a really good setup. This is more like almost, I don't want to make this like VIP Discord material, but this is not financial advice, but for me, this looks pretty good. So I would personally want to enter, build a position, a short position in this area. Actually, no, I wouldn't make it like that. I would do it like, between here and here. And remember, we're on crypto crackhead timeframes. So from here to here is only 1/4%. I would do that, and when it goes below, I would, once it crosses back below here, I would put my stop at just better than break even, just in case it, it does get rejected and pops up and goes down, right? No. In case it does hit my target and then goes, boop, and then goes down, I want it just above this line, but also in profit, so I can't take a loss. And then I would wait for that potential 1 hour higher low. And if it comes back up, well, I just got paid to be wrong. I got stopped out at better than break even to cover my fees. And then you're good to go. You got paid to be wrong. But if the trigger happens, the price can't get back above here, this is going to go to 16K. So that's the next trigger. This is more of your micro time frame trigger. If that were to happen, here's trigger number 2, then all price was doing here, what you would interpret is, this is just kind of like a collection zone where people are comfortable trading. Bots are comfortable trading. Now we've been booted out. We got to find our next comfort zone. Where are we going to go, right? And since you're falling out of this trading channel, has this slope, then you're going to be looking more at a horizontal. All this, you're gonna have to take your brain and go, okay, now I'm horizontal, right? 90-degree right angles. And then, well, I kind of gave the answer right, damn it. I didn't mean to have that there. I wanted to ask you. So it's like Dora the Explorer, okay? Interactive videos here. Do you see the mochila? Or I'm the map, or whatever the hell that is. All right, so behind me, if it were to turn into a horizontal mentality to find the next comfort zone, on when sellers would stop selling and buyers would start defending, that's essentially how I would define that. where would it go? Well, it'll go to that point. What's the first point where buyers will step in while the current sellers stop selling so forcefully? It'll be horizontal, so let's go back. And if you're just jumping on here and I'm telling you, I'm giving, I guess, information presented in a way you haven't seen before that is convenient and clear, and you like it, go ahead and hit like. And if you're new, you need to subscribe and hit the bell for all alerts, because I'm going to keep you in the know. And teach you how to do this yourself is honestly my primary goal. Literally, I would prefer to work myself out of a job. All right. It's going to turn into a horizontal. Where do you think it would go? Let's go. What time frame should I be on? No. Yes. Look at it like that. Where would it go? I'm looking at all these wicks down here. This looks like a nice area where, remember, because price would come down, sellers got to pick a point to start taking profits, which means they stop selling so hard, and they're going to observe how hard the buyers come in. And essentially they take a nap and they let the buyers come play, see how dirty the buyers get in their sandbox, and then they'll be done with their nap, and then they'll drive price lower. At this point here, it's about 16K on the dot. I wish I would have, from my VIP chat that I had right before, I wish I would have taken. Oh no, that's 16.3. Oh no, it's a box, sorry. From 16.3 to here, 16. So it'll come straight to this zone and probably bounce between them. Right there. And then it's going to fill that area out. What happens after that, I don't know. But that would be the trigger. And then you would know, so if that were to happen, all right, no, I'm sorry, I haven't gotten to the next trigger yet, I apologize. This is a larger time frame trigger. The first mini trigger would lead price into this potential second one, which is a higher time frame. That's what I mean. These do go together. And if price goes down, they will all go together like that. So then the next trigger is, okay, well, we know buyers are going to defend this general area and sellers will stop selling so hard unless, there's a bomb that goes off or something. Not wishing that again. Something interesting and unexpected, news-driven would probably have to happen for buyers not to step in here and sellers not to start taking profits there. So it would start filling this area out. And then once it comes below this line and bumps its head, that would be your second trigger. And that would probably take Bitcoin down to the next origin line, which is 14 and change right now. Right here. That would be your second trigger. Let me go to a larger time frame. And that's really it. Because we're not expecting upside. Unless it's January 4th, it'll be a wick up. And that wick up probably, okay, quote my words, that wick up, that fake out, if there is one, whales are limited. It's going to have to be a failure pattern above the daily 21, which I don't have yet, right there. And it's probably going to have limitations of a 45-degree angle to the previous other fake out. January 4th, or no, 4th is about right here. Oops. I don't even think it's going to go that high. That'd be pretty tough to get up there. It could, though. So FOMC minutes, 6% one direction, but it's got time to get on top. Yeah, so on the fake out, I'm getting a little off topic, off the triggers, but so February or January 4th, I think, is when price will start getting volatile again. Until then, it's all just a setup. It's literally just big money trying to figure out, okay, where do we need price to be? Where do we need to park? Yeah, they're looking for a parking spot. That's a good analogy. They're looking for a parking spot before they go into the party, which is volatility. That honestly is a better way to look at this. So they're essentially, this is a parking spot. But how big is your parking spot? Well, I mean, as of now, it looks like it might be from here to the daily 21. But it could end up being, if you see price get above this, it could set it up to really invite a lot more buyers to fake them out. So before then, you could also get above here, use it as support, then fake out, and then come down. So watch out for that. Just because it gets above the daily 21, if it happens before the January 4th, it's likely just them looking for a handicapped larger parking spot. They're going to want to fake out more people, right? So I don't know where the parking spot's going to be. If it's going to be generally under the daily 21 or generally on top of the daily 21 before January 4th, which is this. As of now, it looks like it'll be below. But this fake out, if it was a fake out and it gets back in, it's probably going to be above. So we don't know. We have to wait till that interaction, right? Anyway, the next large, so the first trigger that I went over will bring price into the next comfort zone. It'll be below the daily 21 and likely above this point. But I don't think this point's a trigger, because if price breaks below here, well, buyers will start stepping on in here as well. So I think the next big trigger down for the next, I guess, continuation move is going to be around 16K. It'll just fall right off that cliff, and it probably would be an aggressive move. So the reason why I wouldn't be counting this as a huge trigger, it could be a great place to take on a short, right? But the thing is, it's only 2%. And it's probably going to come right back up to that point. But this line, if it breaks down, yeah, on the 5-minute chart, you might bump your head, but on the 4-hour chart, it's going to go down. So you wouldn't have to wait or have a high risk of being stopped out at break even, assuming you use stops and you move them down on a short. Hopefully you do. Because over time, if you don't do that, you can't make money. It is not possible. Over time. It actually is not possible if you're not practiced with stops and you use them regularly. And that's really all we're looking at. Daily 21 is going to be your best friend. Upside, it's 45-degree angle from the previous fake out. Nothing to look at. It might not even happen. But January 4th, if it does happen, it'll be around January 4th. So it's mostly downside analysis. And then the upside analysis has timing in it, because FOMC minutes at 1400 hours New York on January the 4th. And then before that in the morning, I think it's 9 a.m., 0900 New York, there are moderately high impact economic events, news being released, like JOLTS, economic reports. And so what the big money will do with that is they will simply use that as a license to, it's like a hall pass in school. I have permission to create volatility. I have permission to go to the bathroom and be in the hall during class. And it's just going to be their hall pass for volatility. So I don't see this happening unless it has something to do with January 4th. And if you do see this happening, the chances are increased that it will have already used this as support, maybe only on a tiny time frame. It might only get like a couple 5-minute oscillation bounces, which only last about 90 minutes apiece. So if you go to the stochastic on the 5-minute chart, top to top to top, or trough to trough, from there to there, or from there to there, it's usually about an hour and a half on the 5-minute chart. Okay, if you average it out. And so Bitcoin's super easy right now because it's going sideways, and there's really not a whole lot to do. Therefore, because it's the holiday season, right? And that first trigger will only lead price about 2.5% down anyway. And once it gets to that next trigger, it's going to bounce sideways because it'll come back up to this yellow line before FOMC. Price isn't just, it's very unlikely, unless like a meteorite or a comet with an ice tail hits Earth or something crazy's got to happen. That's not in the charts in order for that not to be accurate, right? Or it could be that, it could be something more simple, like Apple in China has huge production issues, and that takes down the stock market. That actually could be what happens. It could be something more realistic and grounded like that. It doesn't have to be celestial, right? Celestial events. The moon turning purple or something. That would be cool. But regardless, it's holiday season. Price is going sideways as anticipated on this channel, and I recommended it's going to go sideways. Take it easy over holidays. Not going to get much excitement, and I'm sticking with those guns. So if you want to take a break from crypto for a little bit, you can simply set an alert, or just make a line here if you don't like alerts. But if price doesn't break, I would say 16,350, then nothing's happening. If price doesn't break so that $1,000 range, let's call it 16.3 to 17.3. In that $1,000 range, I don't think it's going to be broken, especially not before January 4th. Look, this is January 4th. Do you think this is going to be broken before that? No. Doesn't even look like it, right? Now, how big of a range is that? How much opportunity, how much money am I missing? 6% on Bitcoin. And if Bitcoin dominance is going up, which I don't actually know, that means altcoins aren't going to get much more, right? Yeah, it looks like it's going to pull back. So altcoins will probably get about 8 to 12. Yeah, you could get 12% on that move. Maybe. But you're at a huge risk of a downside move any moment. I don't think it's worth trading up. Unless you're trading on 5-minute candles and lower. You can trade any direction, any time of the day, always. That's the huge advantage to micro time frames. It doesn't matter if Bitcoin is worth $3,200. You trade the same exact way. Doesn't matter if the weekly trend is up or down. You trade the same way. But for newer people, that's how you lose your account first. That's a great way to quickly get that over with, because if you're learning how to trade, you will blow your account, I would say at least 3 times. For me, it was 6 as returning. I know, was it 5? No, it was 6. It was 6 times. In 2018, I think the last one was early 2019. But it was during a bear market. I was trying to learn how to trade on futures in the bear market. Very difficult. As a noob, right? Because I was class of 2017. Anyway, so Bitcoin dominance is taking a break here. So I think alts, if Bitcoin does go up to the top of that, I guess what you might call I don't know. I would call it's probably more in the daily range. More than that middle zone of our consolidation. I don't know if it's just the middle zone that we went on. But if Bitcoin does touch that, then alts will have done maybe 8 to 12%. Because Bitcoin dominance is correcting. So therefore, if Bitcoin hits the top, that'd be 6.25%. Altcoins 8 to 12. But honestly, it doesn't sound like it's worth it to me. 8 to 12% for high leverage 5-minute chart, sure. But if you don't trade that way, it's not worth it. It really won't be worth it. So go take a break, go relax, get off the damn charts, unless you enjoy trading small time frames. But if that's not you, we'll see you after the new year. Get out of here and go relax and do something else. Do something else. We'll see y'all for the video.